Really great to speak with you today. I'd like to know why we're having this discussion. We're talking about this law tax for blockchain idea. Why are we having this discussion? What is this project?
So we are trying to build a one-stop shop in a different way than a basically firm that anybody can walk in on the street. It would be a one-stop shop that anybody can walk in online, hopefully on-chain in time. The idea being that instead of any entrepreneur, basically, whether he's funded or not yet, is for that entrepreneur not to spread himself or herself thin by going to three different advisors between the legal advisor, the tax advisor, the financial advisor, potentially the strategic advisor, because we believe that you and I can build something where people can have that first initial conversation in an automated way. So we're building this app for people to, first of all, break it down for them in terms of thinking process for an entrepreneur, that these are items they should think about. These are areas that may not be immediately obvious or that they have disregarded because of the complexity that goes with it. But it's to make their life easier. So save time, money, obviously, but also for us as advisors and as a community of advisors to be able to have those first data points that would be a conversation starter to define in a more precise way the needs that they have as entrepreneur wherever they are in the stage of development of their venture.
So basically, we would be addressing legal services and tax services, which leads me to the next question. Why you? I would love for you to share with the world your unique combination of skills that perfectly intersect with the Web3 law and tax requirements.
Thank you very much for giving me the opportunity to answer that question. I'm a international corporate and tax lawyer, meaning that my two dominant things in my portfolio of skill sets are legal, corporate law, contracts, structuring, but also tax, to do it in a tax efficient way. It doesn't mean tax efficiency. I want to clarify something here. It doesn't mean tax evasion. It's about finding the right route to structure a company or operations, but to pay the right amount of tax and in the most sensible manner. Um, One thing that I have done in addition to that is also add finance to my skill set. I do have not only my master's degree in corporate and taxation, but also a LLM in law of international finance. And today, some of you already know that I am writing a PhD thesis on taxation and crypto, focusing on utility token, actually.
And maybe I'm injecting this information, but I believe you have significant international experience and exposure.
Yes, that's true. So I am a French national based right now in Paris, and the weather is gorgeous. However, I have been back in Paris only for 18 months, and I have been wandering around for 20. And I have been living and working in the UK, in Denmark, Mali, Gabon, Cameroon, Kenya, Dubai, even, until I had to relocate because of my new best friend, COVID.
Excellent. So now, somebody who has a lot of interest in crypto blockchain projects, I'm interested in your opinion as a legal and tax professional. What does a project need to consider when launching?
There are a few things to consider when a project is launching. First of all, who are your co-founders? Because we all know we have one, two, or three co-founders in everything that we do, or partners. Are they going to be co-founders? So you need to think about what relationships, how you're going to define your relationships with your co-founders. either in the shape of a shareholder agreement, what role everybody is going to have in the operations. Are you guys complementary? Are you overlapping? These are conversations to have at the beginning. And I will emphasize that when you get married, unfortunately, you need to think about the divorce, think about your dispute resolution mechanisms and your exit clauses. It is potentially counterintuitive, but it saves so much pain, time, and money when things go sour, if they have to go sour, or it can help you exit your venture when you have somebody buying you out. So it makes a lot of sense to do that. When you look at the operations themselves and the business itself, what is it? Is it a software? Is it a metaverse? Is it DeFi at the service of impact projects in the real world? Once you know what that is, you have many different aspects to consider. One of them is always which jurisdiction you're going to incorporate into. And one thing that I like to remind my clients and my network is that it's not because we're sitting, for instance, for me in Paris and you in Spain, that we're going to walk next door and incorporate, register our companies in the trade and commerce registry nearby. One thing that we have all learned to do, even more so because of COVID, is to work online. And many of those governmental institutions and trade and commerce registries have gone digital, meaning that you may be able to pick and choose depending on the local requirements of nationality and residency. As a shareholder, you may be able to incorporate actually a company in Estonia. If you're an EU citizen, anywhere you sit in the EU, you may be able to register a company in the Seychelles. And then you can ask yourself the question as to what law you want your contracts to be subject to. So you can have your company incorporated in the Seychelles, but however, having your, let's say, independent contractor agreements with your pool of workers, subject to UK law, for instance, that is possible. I am sitting in Paris, my clients are global. I usually choose either UK law or the law of my clients for my service contracts. So you're not bound by territory any longer. And I want people to remember to think out of the box and to explore more where they want to incorporate.
See, that's really interesting. I did not know that the jurisdiction of incorporation could be separate from the jurisdiction of oversight for contracts that you choose. So that's I've been educated there, which leads me to the next question. What are the things for a project manager or founder to consider when it comes to selecting a jurisdiction of incorporation? I mean, we hear of so many. We hear of Switzerland. We hear of Gibraltar, Dubai, Singapore, BVI, the Channel Islands. How do you make those choices?
So it depends on what is your planning, right? When you start incorporating a company, I'm assuming that everybody who incorporates a company has already some potential clients that they can invoice to. If not, it's because they need to do either token or NFT issuance. One way or another, money is involved, money reception or money expense, right? That's the only reason why we need to incorporate, actually. And we need to incorporate to have that legal entity that represents us as shareholder or with your co-founders as shareholders so that that entity can operate. Now, one consideration that a lot of the multinationals have in mind and have had is tax optimization, so low tax jurisdictions, in essence. The BVIs are one of them. Seychelles is one of them. But now, because of the shift that the global tax administrations have operated in the past decade, in particular under the pressure of all the governments, but the OECD in particular, unfortunately, low tax jurisdictions are seen as a threat. You may have heard that there has been an agreement in the last few months between the OECD countries to have a minimum effective tax rate of 15% globally, regardless of what the local corporate income tax rate says. So for instance, Ireland has 12.5%. Dubai is planning, it is 0% right now, but in June 2023, it will have 9% of corporate income tax. And there are many subtleties as to how this corporate income tax is going to be applied to the revenue generated, excluding, for instance, the intra-group transactions. But my point here is to say that do not think low tax jurisdiction any longer. It doesn't matter whether you pay 30% where you incorporate or whether you pay 10 potentially, because that's not what you're going to have to look at. If you are considering revenue generated from having digital assets, you're going to have to look at the details of how your digital assets are going to be accounted for in your accounts. In Switzerland, for instance, digital assets have to be put on the assets of the balance sheet of your company. But every time you sell a digital asset, it actually brings your capital down. So it's as if you were doing a reduction of share capital, because it will increase as the value of your token or NFT that you have on the assets of your balance sheet increases, meaning that you have a tax every time that you want to sell your digital assets. And you have to have an evaluation on the 1st of January and the 31st of December every year to see if there has been a value increase or decrease for your assets on your balance sheets. So, and that's very tedious because it means numerous forms, numerous times of compliance, findings online or offline, discussions potentially with the Swiss tax authorities, etc. And then where people think, because all the foundations that we know in the crypto world are incorporated in the canton of Zug, for instance, you think that they're all attracted because of a crypto-friendly legislation. Yes, that's true. But when you are deriving your profits from digital assets, then you're caught into tedious compliance. Another example, Mauritius, for instance. Mauritius says it has a crypto-friendly legislation. Great. People are starting to incorporate left, right, and center there. The second, you need a bank account with your local bank in Mauritius. Unfortunately, the Central Bank of Mauritius says no. You have to have a list of documents that sometimes are completely impossible to provide. And then the timeline is so long that people get tired and they can never open their bank account, therefore never operate under Mauritius laws.
Interesting. That's really fascinating. Particularly the means of dealing with digital assets in Switzerland. It sounds like how accountants deal with inventory, either first in, first out, last in, first out. And there's quite a burden and strategic approach to valuing inventory. So this was super informative. Now, this segues into, I guess we talked jurisdictions. What about tax implications? Should projects be concerned with the tax implications? You've addressed some of this, but are there other major tax implications when it comes to issuing tokens or how they operate that they should also be considering?
So when you issue a token, you have to clarify what law you want to subject your token issuance to. It starts with regulated or not regulated. We all know that going to the US or talking to US investors or potential buyers means you may get caught by the SEC regulation on that,
Scary.
right? Yep, because then the filing takes a long time. There are exemptions, but that takes a long time and a lot of money as well. And very few lawyers are capable of assisting with those processes. So that's the first step. Then the next step, if you have a unregulated digital asset that you want to issue, you will then have to think in terms of what it means for the booking the revenue in your accounts for your company. Is that cash? Is it going to be digital asset? What is the compensation, the consideration that you're going to get for that NFT or token you issue on the market? How is it accounted for in your books as a company? How is it treated locally by your tax authority? Is it regular income, therefore the corporate income tax applies? Is it capital gains tax? Because then they will take the value at issuance and value at sale. Or 1st of Jan, 31st of December, just like in Switzerland. Is it just profits derived from financial instruments and therefore subject to a specific taxation? Is there a law locally for digital asset taxation? That depends on where you choose to do your token issuance and whether you're regulated or not.
Wow. There's a lot to consider that you normally don't hear about whenever people are discussing crypto assets. So you have mentioned a few things about tokens. Are there any other considerations that need to be made? I mean, I hear a lot about security tokens now, utility tokens, NFTs, non-fungible tokens, and in projects are often using these different types of digital assets for raising capital. What things do we need to be concerned with beyond the tax implications when we talk about working with tokens, in your experience?
In my experience, it sends back to, first of all, deal with whether you want to talk to US residents or investors or not. That's your starting point. Whether you are in China or in the US, it's the same. Second is, once you have chosen the law to subject your token issuance to, do you need an agreement, a licensing to do so from the competent authority in the country you have chosen?
Okay.
The law, right? So you look at that. Then you can decide, or you can define your token. If it has a utility, if there's an impact above and beyond P&L result, then there is an impact. That means there is utility. And you need to make sure that legally, under the law that you have chosen, it is not qualified as a security. Otherwise, you're going to be regulated like a financial institution. That's tedious, long process, etc. In Europe, there's a new law coming called MiCA, and it's basically a agreement that companies, crypto companies, can get from the European authorities. There are two ways to get it: locally or centrally. Locally, as in a EU country, or centrally from the EU itself. And then you're allowed to basically do crypto activities, trade, custodian services as well. Um, and you can help your customer base basically, for instance, have NFT wallets and help them get into that and manage them. Um, One advantage of that could be that in 2023, when you do a local application in France, for instance, for such an agreement, it may be extended to the whole EU zone, which
That'd
is
be
interesting,
convenient.
but it's still a project. It's not done yet. So that's the next step. Any licensing agreement you need to have from any competent authorities. So the regulatory aspects are quite heavy. To summarize, when you
Yeah.
think security, utility, NFT token, regardless of the I would say, characteristics of your token. Then if you get into the details of your token, you may need the advisor to issue a legal opinion to make sure that you have something on your records to help the competent authority, pull back should they come and scrutinize you. So I strongly encourage having those kind of defense files in a way,
Yeah.
with legal opinions, tax memorandums. And I am aware that they cost money, but it's worth the investment because it buys you the peace of mind as an entrepreneur.
That's really, really strong advice. And I think it's advice that not all of us have been exposed to or consider. Um, there's one thing that almost all projects are concerned with, and that's raising capital. So, as legal counsel, as a tax expert, what are the things that a project owner or creator should be considering in terms of organizational and legal structures for raising capital for a project? Beyond the chain specific funds like a catalyst, when you consider going out to the market, discussing with VCs, what things should be considered in terms of the structure of your organization when raising capital?
So I would take two examples prior to proving your MVP and post MVP proof. Prior to an MVP, if you're looking basically for seed capital, it can be an angel, can be family and friends. Sometimes you get grants from, the catalysts of this world.
Yeah.
One thing that I will emphasize is know who you are, know the purpose of your project. So it's not legal, it's more philosophical at this stage, but there are some very thin underlying strategic considerations to keep in mind. One thing that a lot of the large corporates display on their websites is what is called the vision, mission, value statement.
Okay.
But that matters because when you are pitching a seed funder prior to MVP, you have nothing to show for besides yourself, your experience, who you are as a team, and what you want to achieve as a purpose. So the vision, mission, value statement becomes critical. You have to know who you are, you have to know why you're doing this, and you have to at least have identified a potential customer base, for lack of better word, because that's all you can put forward to convince your investor. Post MVP, you have the added advantage to have your proof of concept, basically, and that you are demonstrating potential scalability. There, the conversation is a lot different, that it's about business itself. How tidy your first accounting and expense are. Is it just a spreadsheet or is it already in QuickBooks, for instance? Small apps that you can use to facilitate your life, right? Do you already have at least a 2-page document, even not longer than that, as a shareholder agreement? Did you guys shake your hands as co-founders as to who's going to have what and on what, what role is going to have? That's also something that you can put forward. And then your operations. Do you already have employees? Do you already have offices? How lean and mean your operations are, though you have your MVP in hands? What is your pattern of spending? What is your pattern of proving your concept, meticulously with discipline at every stage of development, if it's a software, for instance? These are things that the investor is going to pay attention to. And then overall, as a structure, make it as simple as possible so that you can replicate on Connect's products, additional products that are matching what you have proved as an MVP,
Mhm.
or other jurisdictions.
Okay, that
So
makes a lot of sense.
scalability is about duplication. And for duplication, you need to have as clean, as lean, as mean of a structure, as a way of operating, and as disciplined as possible so that it's appealing to the investor because then he sees you as a low risk investment, despite the industry that has demonstrated volatility over the past few weeks now.
Yeah, very insightful comments. And yeah, very, very insightful. Now, we know that, well, particularly in the Cardano ecosystem, but not exclusively, even throughout the blockchain space, there's a lot of appreciation for the fact that Africa seems to be very fertile ground for the deployment and development of a lot of technology in the blockchain and crypto space. So I think it behooves me to ask that for individuals and projects established in emerging markets like Africa, how best should they structure themselves for capital raising, for governance, and even operationally?
So incorporating a company in Burkina Faso is almost as easy as doing it in France, for instance,
Huh.
or in Nigeria. Um, And in Kenya, actually, it's even faster than in France, in my own painful experience, unfortunately. Um, one thing that I would start with is think about who you're going to attract, who's your audience, who's going to be your potential investor. And I'm going to call a cat a cat.
Yeah,
If your investor is a middle-aged Caucasian man,
yeah,
you may want to consider to have a holding company somewhere in the global north rather than in the global south. So think perception, think, make yourself as vanilla as that person is, basically, low risk. Um, when you are sitting in Burkina Faso or in Nigeria and you need to incorporate an entity, a holding company for your structure in the global north, what you need to look at is the network of double tax treaties.
mm,
Because one way or another, that investor is going to be a shareholder in that mother company sitting somewhere in the UK or Germany, for instance. And they will want to look at how, in an optimized tax efficient way, they can have their dividends pay back up to the company. And therefore, the two countries we're looking at, for instance, in my example, UK, Nigeria, will have to have a double tax treaty so that the dividends are low taxed when paid out of Nigeria back to the UK. The same for the person, the investor coming into a French mother company, and dividends paid out of Burkina Faso.
okay. That's a lot to consider, but yeah, double taxation is significant. Regardless of even that impacts people even outside of emerging markets when you're dealing internationally, and then even going from the dividends to your personal tax situation. So that's absolutely relevant. Now, uh, this, I guess, is a more advanced field of the Web3 space, but let's talk about Metaverse as my last question. So about Metaverse. So many people are interested in migrating, walking their projects in some way to capitalize on the phenomenon known as Metaverse, virtual existences. What are legal and tax considerations of this new domain? Because really, you're creating a virtual world, having sometimes storefronts in that virtual world, being able to transact within that virtual world. What things should a project owner be considering there?
I'm going to talk about, if we still have a bit of time, I'm going to talk about three different aspects.
Yeah.
The number one is the most obvious one. If you build a metaverse that looks like a city, for instance, a small town, where you would have a bank, for instance, but where as an avatar, as you, as a human being playing an avatar in that metaverse, you could walk into that bank and then all of a sudden buy NFTs in that bank in the metaverse, paying with fiat. Just enter your bank account or your credit card details with a form that would pop up when you speak to the teller.
Yeah.
That's the first example. That means that the metaverse creators become providers of custodian services, that they would open a wallet for that person playing in the metaverse, that they will have to be somewhat regulated, that they will then collect money and that they would manage money on behalf of a individual who would have entrusted that company with their money. There would be an exchange because then they would manage NFT wallets. They could be options for secondary market trading later on. Um, and the person who's playing, that's going to be my second point. The person who's the bank um, employee
Mhm.
played in the metaverse, that person potentially is playing a role and therefore being paid for that. How do we pay somebody to play a role in the metaverse? Is it an employment contract? Is it a contractor? Whose responsibility is it? Is it the metaverse company employing that human being playing a bank representative? That's going to be another aspect to consider for those who are building this kind of interactive metaverse where avatars are played by any of us, basically. Do they want to be remunerated for that? And that could be actually one way, a side way, a hustle, for people to, have an additional income on a monthly basis. For some, it could be the mainstream of income and therefore lifting them out of poverty if the rates are interesting enough and a little bit above minimum wage. So, these are considerations and I think positive aspects of what we can do with the metaverse. The last thing I'm going to mention about that, above and beyond the regular legal and tax considerations for operations, is really the philosophical and the ethics behind that. I have read a couple of weeks back that there were projects to build avatars of people who have passed away, and with the technology to have their digital being survive their physical death. There are questions about ethics of, does that, make the death of that person not actually a real death? What happens to the money, if there were money, if there were assets attached to that person? There will probably be, who's going to make that person alive in the metaverse? Who's going to animate that person? Tomorrow, if we can replicate sense of smell and touch and feel through captors, maybe recreate the sense of hugging with that person, or, with DNA extracts, I don't know, do something about that as well. These are very strong ethical questions, I think, that any regulator needs to ask and maybe consider through discussions and very open, candid dialogue, I believe, by the creators of Metaverse, who have the wildest ideas, a lot of good things, but some, on the border of what makes us human beings, basically.
Wow, that's truly a brave new world. A lot of things that I had not considered. So this new project, LawTax4Blockchain.io, and your existing services through Imani Partners, you'll be able to help guide project owners and existing projects, new projects. What will you be able to do to help them in these fields that you discussed?
So to be very pragmatic,
Yeah.
it goes from helping them even define their vision, mission, value statement through a workshop of 6 sessions spread over 12 weeks, because this is human change. So, and human verbalizations, it takes time, to building a business plan where we can just throw numbers in an Excel spreadsheet, do the 3-5 year projection that makes sense to any investor, help build investors pitch deck, help them build investors memorandum, connect them to a community of investors as well, help them think in terms of legal structuring, from the very intimate conversations with their co-founders to incorporating the company, the articles of association, finding the right jurisdiction, to then mapping the tax risks associated to what they want to do, and help them spread their wings so that past the proof of MVP, they can just go for the sky.
Honestly, this sounds fantastic. I'm excited to be along for the journey. You are incredibly knowledgeable. Thank you so much.
Thank you for your time today. Thank
All
you
right.
so much.
Bye.
Bye.